And I think we should be live. Welcome, everybody, to DCA, where every week we take some of the top creators in crypto and digital asset space and bring them together to try to figure out just exactly what is going on with the market. And today is a pretty good day to bring together some pretty smart guys. So first of all, I've got James from Invest Answers. James, how are you doing today?
Excellent. Well, it's a stressful day. It's a great day to be here with everybody, but there's a lot to talk about.
Yeah, and I'm really curious because I know you got your finger on the pulse of what's going on with traditional equities. So I can't wait to see what you have to say, because I think that market's going down just a little bit. And then also we've got to our immediate left, Ben from Into The Cryptoverse. Ben, thanks for stopping by. How you doing?
Pretty good. Yeah, thanks for having me. Always excited to come talk about crypto.
Yeah, right. And then if you don't know, there is a link in the description for Into The Cryptoverse, also for Invest Answers, and we should be set. So before we get going, I should probably ask the question, are we doing okay as far as audio and visual? Anybody have any problems? Let me take a look at the comments to make sure we're good.
All good.
Fantastico. So here's what we got, everybody. We've got a couple of questions. We're going to go down the list. So first up, we're going to go about, is this downer December, or is Bitcoin going to meet or exceed some expectations? Also, we're going to talk about the alt performance, and we're going to break it down by categories. Now, this is only a 1-hour show, and we'll try to keep that within the time frame. But if we take a look at the categories, maybe we can get to where things could potentially go as far as ups and downs. We're also going to take a look at the macro, take a look at taxes and profits that CEOs and insiders sell off. And from what I understand that James just told me behind the scenes, there's some fireworks going on, which makes it a real S show for traditional markets. And then next to last, if we go into a full crypto winter, how do you guys play it? Stable coins, cash, new assets, DCA. And then finally, what new projects are you interested in and why? So that is the criteria. First, I would like to start with Ben. And because Ben, I've been watching your channel now for quite a bit of time. And you were the first person to talk about these lengthening cycles. So I think you are the one I'd like to talk to first about this December. What do you see? What's going on? Is it going to be the 150K, 130K, or everything just lengthens out?
I don't think we're going to go to 130K this month. I don't think we're going to go to 100K this month either. But I do think we're en route to 100K. It's just going to take us longer to get there than I think a lot of people are generally anticipating. And that's not really, it's not really a bad thing, I don't think. A lot of this market cycle, I think, is a lot of it's fueled by, there's obviously institutions, but people are staking, right? There's DeFi. It's a good thing if the cycle just continues on and we don't get a parabolic blow off top immediately. And I honestly think that'd be the best thing for the space. So no, I don't foresee a 100K Bitcoin this month. But I do think it's coming in 2022, and I think the charts on the screen here, and there's sort of just a brief outline of the idea of lengthening cycles. This is actually the entire asset class, not just Bitcoin. It looks like just Bitcoin because Bitcoin makes up a lot of it. But yeah, I think we have actually quite a ways to go, and right now we're sort of grinding it out at some of these lower prices. Hopefully we'll look back at the end of 2021 and see it as kind of setting ourselves up for the second leg, of the cycle. But I think we have a lot to prove right now, and that's what we're doing. So no, probably not 100K Bitcoin this month, not 150K. I should say if that does happen, I'll probably be exiting if it happens this month. But other than that, I think the market looks relatively healthy, and we're just slowly trending higher.
Gotcha. And then James, so how do you see things going? Lengthening cycles, do you think we're going to have a downer of a December, or do you think it's going to be just business as usual?
Interesting question. And I'm actually extremely distracted right now because there's so much going on. And I might do a couple of live trades while we're here, because
now we're talking.
Just to digress a little bit, this is the time where the capitulation happens. And then the buyers come in for the last 30 minutes of the stock market being open. So about 25 minutes from now, we could be at the bottom. So I'm currently short a bunch of positions. I'm short SoFi, Trade Desk, Coinbase, Tesla, massive short position in Tesla, PayPal, Illumina, NextEra, and a bunch of others. So I might cover some of the shorts and go long. Things like MicroStrategy are super weak right now. Now, in terms of where I believe we are going, if you look historically of all the months of December from the beginning of time, 2011, 50% gain, 70% gain, 2012, 5%, 13, minus 18, 14, minus 16, 15, 20%, 16, et cetera, et cetera. The average return for December is 19.22%. And I think it will be a good December. Right now, we are being hit with a snowstorm of crap all at the same time. Literally, the list is endless, and we can talk more about that as we drill into it. But in terms of how Bitcoin, as I say, MicroStrategy is holding up, it's actually relatively strong considering other assets. So all in all, I'm kind of happy. I wish things like Solana were a bit cheaper, and Ethereum. Like if you just look back 5 days, Ethereum was at $4,000. Now it's at 4,200, and the bottom has fallen out of other markets. So it's very good to see the relative strength of the crypto market right now.
Yeah, it's crazy. So if you're just coming in and you don't really pay too much attention to the traditional markets, you kind of might want to do that just a little bit, because if we take a look at what's going on right now, I mean, this is what we got for S&P 500, NASDAQ 100, Dow, Russell, a US dollar index, whatever. And even the Bitcoin index down much ado. So we'll get into that a little bit later, but it looks like there is blood in the streets, and I think we know what happens when there's blood in the streets. Sometimes it's a good idea to buy the dip. All right. So on top of that, so we kind of know we see where things are going. Let's talk about, just real quick, if we don't think that Bitcoin's going to hit 150K or even 100K right now because of what's going on. It could. It's one of those markets. Here's the next question then. If Bitcoin doesn't go up, can alts decouple and start to outperform Bitcoin and do some really great things? And not just alts in general, but as far as like different categories. If we take a look at smart contracts, DeFi, gaming, meta, those type of things, which ones could outperform, or are they all going to fall flat? And then James, since you were just talking, I'll pick it up with you.
Yeah, well, what I see happening is you're seeing a bifurcation in the market. I think investors are getting smarter. The ghost chains, the fake crypto, the garbage, crypto investors are getting more educated, and I'm seeing them just getting weaker and weaker over time, especially over the last 3 months. I'm not going to mention any names because I don't have to deal with that crap, but you can see the money is really beginning to flow into the stronger assets in a big way. And even if you look at I tend to focus very heavily on smart contract platforms, layer ones, some layer twos.
Yeah.
And it's just interesting to see the shakeout there. When you analyze things like tokenomics and fundamentals and growth rates and TVL of some of these chains, they didn't deserve to be where they were. And now the market's waking up to that. And the market is beginning to recognize the stronger players. So I think that's very healthy for the market too.
What's the Warren Buffett phrase? When the tide rushes out, you see who's
not wearing any pants or whatever.
So
something like that.
That could be it. Ben, what do you got?
And that's going to continue, I think, as well, because, well, there's a weird scenario I see, and I'd love your guys' take on this. There's so much value in some of the cryptos, like 95% of them are worthless, in my opinion, maybe 99%. But 5% really have tremendous use cases. But I think they are weak now because the whole metaverse NFT world is like the black hole that's sucking everything in. And if it wasn't for the metaverse, these some layer twos like Polygon and Chainlink and other names would be doing a lot better. Interested in what you guys think of that theory.
I'll throw it to Ben first, then I'll answer. Yeah, I mean, I think to first answer the question, can these other projects run if Bitcoin's not? I think the answer is yes, as long as we stay above certain levels. Historically, I follow something I call like the bull market support band, and it's basically just the 20-week SMA, the 21-week EMA. And I can try to just show it on the screen, but basically the general idea is, can you guys see that? If we're essentially above these levels, then historically altcoins can run against Bitcoin. If you go back and look, every time Bitcoin has a weekly close below that 20-week SMA, if you always traded, I'm not telling people what to do, but every single time that Bitcoin had a weekly close below the 20-week SMA, Ethereum has always underperformed Bitcoin from that close until Bitcoin got back above the 20-week moving average, like every single time in history. And then the reverse is also true, except for one time. So every time Bitcoin is above its 20-week moving average until it gets back below it, Ethereum outperforms Bitcoin, except for one time in history. And that one time was back in 2019 when we saw Bitcoin run and kind of, most of the market got left behind. So to answer your question, I think that as long as Bitcoin is sort of staying above 52K, 53K, we could still see a lot of projects run. And we've seen a lot of strength by Ethereum recently. And I think that could certainly continue as long as Bitcoin, if it just kind of goes sideways above these levels, then, and we're seeing that today. I mean, like, right, Luna's running, right? Luna's been running recently. Matic, that one's been running. I think Matic's a great project. I mean, even Cardano had a push recently, with some of the announcements there with SundaeSwap. So yeah, I do think a lot of these projects can still do well as long as Bitcoin holds the line, right? If we go below those levels, then it's going to be similar to May and June and July, when most projects aren't going to be doing anything but bleeding against Bitcoin. Now, I know there's some everyone has a pet project, right, that outperforms Bitcoin at all phases, but most of the asset class as a whole would not do well against Bitcoin if Bitcoin goes below this level here. So that's what I'm watching really closely. And you can see we're actually at those, we're approaching those levels right now. But I just to take a couple more seconds here, because I know that I'm kind of going along on this question. But
No.
one of the things I like to look at is the short-term bubble risk on Bitcoin. And what I'm looking at, and I'm hoping, I do hope we hold the line. One of the things you can note is that anytime Bitcoin gets super extended from that 20-week moving average, we typically fail to hold the line because we're just too far gone. We've gone up too far. We can't hold it as support. But if you remember, in 2017, we held the line every single time for a lot. I mean, this went on for over a year where we kept holding the line. And you'll also notice that during that time, we never got that far extended from the 20-week moving average, which is somewhat similar to today, right? It's somewhat similar to today. And so, I can't say for sure that we're going to hold it, but I would say that I think the risk on it right now is not nearly as high as it was back in mid-May when we were, we went 100% above the 20-week moving average. We came back down to it. We hadn't tested it in like 7 or 8 months. So, I mean, I am fairly optimistic over the next 3 to 6 months, especially on a lot of altcoins, assuming Bitcoin holds the line.
Yeah. Well, I got to tell you, I was hopeful that we were going to see, like I called, fireworks after September. We did pretty good in October. Everything was just fine. November kind of fell a bit flat. I'm like, well, we're going to December. We should see some pretty good things. But then when we get into the next question about the macro events, you're going to see kind of why everything happens. And then if you just take a look at all this stuff, I mean, we like everything to decouple from the traditional markets. And we'd like things to decouple, like some different assets from Bitcoin. That would be great. But we still kind of see how things just are not doing that. And Bitcoin continues to be that one piece that kind of holds everything together, fortunately or unfortunately. And that's how it is. And then even when I take a look at the narrative kind of about metaverse and play to earn games, I mean, even today, they took a big shellacking. I mean, look, even the darling, which is Axie Infinity, in the last hour, 2.6%, 4% for 24 hours, 15% for Gala, Wax, 8%, and Sandbox, 5.5%, Decentraland, 10.2%. So, I mean, when we take a look at these things, we like them to be the way they are. It's just not true right now. We'll see how things bounce back or not. But that leads me to the next question, which I think is the bigger one.
Before you jump, can I show a quick chart? I'd like your guys' take on another version of how Bitcoin looks today. So let me share my screen.
All right.
Give me 1 second.
This ought to be good.
Yeah. So this is, let me know if you guys see it right now. Can you see my screen?
Not yet. I've got you. Let me remove my screen. No, not yet. Can you click on either the windows or the tab itself?
Ah, there it is. Got it. Okay. All right, we're going to see ourselves. So this, can you see it now? Not
yet.
Weird.
Well, how about this? Because I'll see it when it comes up.
Yeah. Slides. Let me see. No size. Hold on a second. Come on. I've done this before. It's always worked fine. Chrome tab.
See,
There
that's the
we
beauty
are.
of technology.
See it
And
now?
there, and now we do.
Boom. Okay. So
Great.
this one is kind of where I see Bitcoin. This is the weekly chart. And I'd love Ben's feedback on this too. But there's two critical levels of support. We're right at that 0.5 fib level, 54.4K. And we also saw the max pain was like 55 to 54K. It's right kind of in the middle right now.
Yeah.
Just per this. And then the 0.6 is at 51K. I think that is probably as far as we could go now. These are the two support levels that I see. Wonder what you guys think of those on the weekly.
Well, I'm going to refer that not to me because I'm not the big TA guy here. Ben, what do you got?
Yeah, I mean, I think 51K is still completely possible. I mean, you know, the 20 weeks at 52, the 21-week EMA is at 53. Even if we go to 51K, as long as it's a wick, we can still close above the 20-week. And even if it is a close below it, you know, we saw an example of that back in 2013, where we closed below it. But as long as we got right back above it the following week, we were still fine. So yeah, I think, you know, I look at this and I say, yeah, like 54K does seem pretty reasonable as a potential bounce. And there's a lot of confluence around there as well. I mean, there's also the 100-day moving average is at 54.5K, which is where we bounced off back in, you know, the last low we had back in September. We had a double bounce off the 100-day, which we're currently below. Yeah, I mean, it can always go below that, of course, if there's some black swan event. But I think if we want the integrity of the bull market here in the short term to remain intact, certainly we'd like to stay above 50K, 52K, those levels.
Yeah.
Just as we're talking, it just took a huge wick down too. So
yeah, I know. I'm watching it right now. So that's what I'm saying. Like, I mean, the 50 week is where we also bounced back in July. So I mean, that one's up at like what, 47 now. So yeah, I mean, I think that the market, a lot of people have really high expectations in the short term because it's Q4 of 2021 and everyone's been promised parabolic rallies in Q4 of 2021. But I kind of see 2021 as we've just gone sideways more or less for the entirety. I mean, 30K to 60K is where we've been the entire year.
It's amazing we're doing this live because I did say 12:30 is the capitulation time. Typically for the stock market stuff too. So it looks like it might be happening, but we should see money coming in about 10 minutes, maybe.
Yeah, so stick around. I think you're going to like this. And you know what? Like when we're talking about these things as far as like where Bitcoin's going and the different price history, when I was just doing some research for a video for tomorrow that I was going to do, and I don't remember it like this. Maybe my memory is failing, but when we remember, like I remember in 2017, this is the Bitcoin chart from 2017 from December 1st to January 29th, 2018. I just kind of remember everything just going up. I mean, maybe it's because I was in the grip of FOMO and I was just kind of getting into this whole space. But I want everybody to remember this when they think about 2017 and how great it was. It was great. It was awesome. But take a look at these peaks and valleys and how turbulent it actually was during that whole time. And now we're seeing the same thing happen again. And that was the last major parabolic bull run. That's all just a little snippet to keep everybody happy as far as like, hey, why isn't Bitcoin at $1 million yet? So I'd like to speak to a manager. All right. So that would lead us then to the next question, which I think this is the bigger thing that's happening, the macro event. So we're taking a look at, we're getting around that time for people who have to want to sell off as far as like taxes, CEOs and insiders taking profit. James, you would talk about some different, also the variant, the Omicron housing situations. Tell us what you got. So I'm going to direct this question to you first and then Ben second. What do we got here?
Well, we're being hit hard today. We've been hit hard since OMI last week, and I cover that a number of times in my videos. It's always something that we have to keep an eye on when we're investing and trading. I know people think, why macro? Just focus on crypto, but everything impacts everything. Everything is interconnected. So the big news today, obviously the Dow is falling. The November job report had a huge miss. They were expecting, I think, 520,000 new jobs. They only had 200,000. That's a big, big miss. So a couple of things we've been hinting at have been obviously the Fed has to make a decision. They said they're going to taper, which means they're going to print a little less money. They're going to cut it down by about 12.5% every month. So they'll stop money printing sometime by October next year. But now they are stuck. They have a dilemma. And that dilemma is, okay, if we stop money printing, we're going to slow the economy. The economy is already becoming almost quasi-stagflationary, which means no growth and high inflation, which is not a good place to be. So they got to figure out what to do. And also they had plans of increasing interest rates, which has the markets a little bit nervous too. But they can't do that for many, many reasons, which I won't get into here. The other problem is you got your government debt limit. They need to raise that. That always causes concern. Is the government going to shut down? I know President Biden in the US is trying to deal with that right now. Evergrande, we said it was going to come back to bite. It bit us today. They said, we're not going to be able to make our payments. We're stuffed. And then it's just then you have the supply chains. Inflation is going to get worse, not better, because of the supply chain impact. Just think about mandates across the world now that workers need to get vaccinated in order to work. Do you know how many people in Germany are going to quit? Like it could be 15% of the workforce.
Yeah, we see this in the New York City firefighters. We see this for first responders all throughout the United States. The same thing is happening right now.
So literally everything's going sideways real fast. That's kind of like a quick glimpse into the macro story. What do you guys see?
Ben, I gotta defer to you. How do you see this going about? Because the macro is, I mean, there's so many things to take into account. Where are we?
I think I have some generally different views on the macro stuff. Look, I mean, I think it's all certainly important, and we can easily look at things and see kind of how they affect the markets in the short term. You know, plenty of times this year we've seen things, you know, transpire, and then after that we saw the markets dump. But you know, I mean, at the end of the day, it did not stop the S&P from continuing to push higher just a couple months later. Yeah, I mean, in the short term, it's, you know, it's a bad week, right? It's in the short term, it doesn't look that great. But I mean, if history is any indication, you're much better off assuming that the stock market trends up with time, I think, than assuming you're going to have a huge bear market just around every corner. I mean, I don't claim to be nearly as an expert as this as you guys, but it's just in my own experience. You know, I've ever since March 2020. You know, back then everyone was calling for a Great Depression and a you know, multi-year recession. And if you basically just kept your head down and bought stocks, you'd be doing really well. And there's always someone that's going to call the next bear market. And most of them are going to be wrong. And eventually someone will get it right, and they'll claim victory on that for the next 10 years until they're right again. But look, I mean, you know, even with crypto though, and tapering and all this stuff. Look, I mean, Bitcoin's been going up, what, 2 million% or something over the last 10 years, and it didn't need the influx of cash to do that that we've seen this year. I'm not saying it hasn't helped. I'm sure that it has. You know, I'm sure that it has helped. But I don't think that it's going to stop. Whatever happens, I mean, of course there could be some black swan event. I don't know, but I think Bitcoin's on a path ultimately much higher than it is today, but there will be these short-term macro events in the market which it'll shake people out, right? It's going to shake people out, and you know, they'll probably end up buying higher later on. But yeah, that's my general outlook on the macro events.
Yeah,
you're dead right as well, Ben, on all of your points. If there is a wick and a dip, I mean, we just saw Bitcoin dropped 2,000 points in minutes, and it bounced back $1,000 already in seconds. But the other thing that's also happening right now is you have this weird situation where people need to do what's called tax loss selling. They need to get rid of their losers so they can claim against their capital gains. If they made $1 million in Dogecoin, they need to offset some of that. So if they're holding some losers that haven't done very well, they can ditch those. The other thing that's happening as well is institutional funds. They tend to also ditch their worst performing stocks of the year. Like you look at Cathie Wood and her ARK Disruption Fund, they're getting crucified right now. And part of that is because December is typically a bad time for stocks that have not done well for the year. And it's also a very good time for what's called window dressing to happen. And that means funds need to start. It's like, oh, I never had any Tesla. Now's the time for me to get some Tesla. That's why Tesla showed some tremendous relative strength, despite a lot of the insider selling as well. So you have that weird flippening. Now, what's really interesting is in January, it goes in the reverse. So all the dogs of the year get bought up because they're so cheap. And the successful companies don't do as well in January. So you got this weird timing situation too, everybody. So be prepared for that as well, and start thinking towards taxes too.
Yeah. And I can, you know what? So I'm there with you on most of those things. I just, for some reason, when I take a look at what's going on in the macro event, I mean, for me, maybe we are looking at this at the exact same way. I see it just, some huge opportunities. The problem is that when people look at it, if you were in this for the short game, it's a very tough game to play. So, but if you're looking at for like a very broad range, then it's pretty good. And then actually, like what you just talked about, James, with those, December's a big sell-off, and then January everybody just picks up the dogs because everything's looking good. So like it's the same thing. Like even with like the Bitcoin chart, 2017, which was that bull run, and then everything's kind of went back down, a little bit flat in January. Then over here went down. And then as soon as January came around, a little bit flat. But in the last 2 years, it looks like everybody picked up everything in January, and then just the last one, it was a big, nice spike going this way. So if we're going to do what is tax loss harvesting, I did that myself. Hint, it is legal in cryptocurrency. I did that with XRP, and I got crucified for myself. Everybody thought I was just weekends, but I sold it all. I sold all my XRP. And then guess what you can do? You can buy it right back. And you just take massive losses. You show that on your taxes. Then next year, everything works itself out. All right.
I did see some politicians talking about potentially getting rid of that loophole in the future. We'll see what happens. But yeah, I mean, I think for now we're.
Ben, they're talking about that. They're talking about getting rid of backdoor IRAs. They're talking about increasing capital gains tax, and even here in Puerto Rico, they're talking about taking away Act 60. So, but they've been talking about that for years. So who knows? All right. So that leads us into the next part. Then now we're talking about whatever could potentially happen, bear market, bull market, but whatever happens and comes your way, it doesn't matter if it's a short-term play, very tough, long-term play, you know where to go. How do you guys play this, especially with what we're seeing right now? If we go full crypto winter, personally, I don't believe that's going to happen, but I'm just saying, if it does happen, how do you play it? Stable coins, new assets, DCA, how do you do these things? Ben, I'll start with you.
Yeah, well, I think the severity of I don't think a crypto winter's, I don't think we're knocking on the door of a crypto winter right now. But even if we were, I would have to imagine the severity of it would not be as bad as something we saw like in 2018 and 2014, just because we haven't gone up. We're not nearly as extended right now as you typically are before a crypto winter, right? We're just kind of at the same prices we've been at for a long time. I think the best way to kind of protect yourself, as I've always said, is having some blue chips or majority of your portfolio in blue chips, I think is a good way to go, especially Bitcoin and Ethereum. They're probably going to bleed the least amount. You'll probably see your altcoin valuations go down against Bitcoin significantly if it falls below the 20-week SMA and we have weekly close after weekly close below it. So one way you can minimize your downside risk is making sure you have Bitcoin and Ethereum. If you run modern portfolio theory on this, the Sharpe ratio, Sortino ratio out of Bitcoin and Ethereum, it says 65% Bitcoin, 35% Ethereum, maximizes your risk-adjusted returns. Speaking of selling your losers, if you add Litecoin to that, it says 0.0% Litecoin should be in your portfolio if you want to maximize your risk-adjusted returns. So the whole idea is... Yeah, I have no problem taking a dump on the losers. Because look, I mean, Litecoin's done 94% against Ethereum over the last 2 years. You have to look at what's bleeding against Ethereum. You have to look at what's bleeding against Bitcoin. And if these altcoins, if all they do is bleed against Bitcoin and Ethereum over the macro scale, then this tax loss harvesting is not a bad idea. And that's not to say that you need to go buy that altcoin back. Maybe you just send it back to Ethereum and just forget the altcoin exists. But then, I mean, there certainly are some altcoins that have done really well against Ethereum over the last few months, like Solana, Matic, Luna's been doing really well recently, as we were talking about. So look, I think that the way people protect themselves is they majority in the blue chips. You can have some altcoins, but you should not marry an altcoin. Certainly, a better time to be heavier on altcoins would be after Bitcoin shows more strength. Right. And I'm not saying, I mean, I have altcoins in my portfolio right now, but I would be a lot more confident if Bitcoin's moving up and not going down to the 20-week, like if it's to see some of those altcoin seasons and stuff, like where you're seeing everything go up, like, 200% and stuff. You really need, I think we really need Bitcoin to actually go to a new paradigm, right? Not just hang out at 60K forever or 50K forever. So yeah, I think the way you minimize it is or protect yourself against potential crypto winter, being heavy blue chips. If it goes below the 20-week and you're overexposed in altcoins, you could roll some of those over to either Bitcoin or stable coins. And I think that it depends on how risk averse you want to be. Because Bitcoin at least gives you the potential for the upside in case it turns back around. And I would argue that if Bitcoin does turn back around, there's a good chance it outperforms a lot of other assets in the short term anyways. And if you go to stable coins, then make sure you're earning interest, right? There's so many different platforms you can be earning interest on. And that way, even if the crypto positions you were holding would have theoretically gone up, maybe you can at least compensate for it a little bit by earning interest. I don't know, whatever the interest rates are on the different platforms, whether it's CeFi or DeFi.
Exactly. And you know what it really comes down to? It's like, what are your goals? What do you want to do? I was talking to these kids from Barcelona, Spain. It was just to talk about their portfolio. And I'm like, well, what are your goals? Because you guys are 20 years old, right? I'm way above you. So like what are your goals? Like, we want to make a lot of money and then, have a good time. Like, of course, that's what we want to do. You're 20 years old, but think about it a little bit in the future. So like for me, like my goals would be just to, actually bring down some of the cost of my different properties. So then when I do the short-term rentals, there's more money in my pocket and I can do different things. And then I said, for you guys, what do you want to do? They go, well, we just want passive income because we don't want to work too much. And just like what you said, like you can put it in different platforms. You can stake a lot of these different cryptos these days. Because they had Solana. I'm like, why aren't you guys staking Solana? You should be staking Solana. There's 77% is being staked anyhow. You can get great yield. Also, can you use this platform and that platform, and then also for loans. So again, I think it just comes down to what your goals are, what you want to do, and how risky you want to be. Speaking of risk, James, what do you got? Because you're out there shorting Tesla or whatever different trades you got going on.
Yeah, shorting a bunch of stuff. I covered a little bit of my Tesla short today, about a third of it, when Tesla went down to about 1,009. I shorted heavily when it went up to about 1,200. I was just waiting, and but I'm also in a heavy short position against SoFi, Trade Desk, Coinbase, PayPal, Illumina, Nextera, stuff like that, because it's the way I kind of trade. I run in cycles. I can tell when things are overbought, tell when they're oversold. So now I'm right now in the process of putting a synthetic long in place, about to place a trade on a company called Square. So in full disclosure, Square is like completely bottomed out.
Yeah, perfect. And just as a reminder, James, how many years have you been trading?
31.
31 years. Okay, so just remember that when everybody's like, I'm going to short with leverage shorting, because just like my buddy James does. No. You have to have a little bit of experience for that. You know what's weird though? James, you're a big trader. You got some hodl positions. Ben, I find you more as like more of a hodler than big swig trading. And then me, I'm just basic hodling. But all the things that we just talked about, we all talk about the cycles and where we want to get in as far as our positions to maximize. It does make a lot of sense. All right. And then lastly, let me ask you this, James. What new projects are you interested in?
Well, right now I've been looking really hard at a lot of names, and I search high and low all the time. I've analyzed probably the top 12 blockchain type games, the Galas of the world, the Illuviums, but I can't justify investing in them. Between the tokenomics, the inflationary nature of these tokens. I remember the Decentraland, if you calculate the cost per user, it's $5.25 million versus $148 for Facebook. That is just stupidity. I think I know you have your Charlie Mungers and your Warren Buffetts of the world, and people say, oh, they're dinosaurs, they don't know what they're doing. But literally, I do agree with them on one point. We are way more bubblicious than we ever were in 1999. When you look at some of the valuations, some of the stocks out there. But then what you have to do is take into account the backdrop of the money printing. There's so much money out there. People can't hold on to cash. So they're going to pump it into something. They're not buying gold. They have to pump it into either equities, real estate can't be found, or crypto. And it's like, damned you do, damned you don't type of situation. So it's a very unusual market. But I haven't been able to find any metaverse plays apart from things like Engine Coin and dabbling in a few others. What I did do is I picked up a little bit of Phantom the other day, who had just a tiny position, and I bought more Solana, because everywhere I look and everything I analyze, it's just I can't find a good project with really good growth rates and really good valuation and good tokenomics. And that's kind of where I'm stuck. So I keep going back to using Bitcoin as my money market account. So any extra cash sitting in a bank, stick it into Bitcoin, even if it's $52,000, $51,000. And that's kind of what I'm doing right now. And then also equities. So many bargains right now. I was harvesting cash for the last month or so, shorting a whole bunch of things. That's worked out quite well thanks to today and a lot of activity over the last few weeks. So now I need to find a way to repurpose that money and get into some assets. It could be some Bitcoin miners, for example. They're looking kind of attractive once again now too.
Gotcha. Yeah, I see where you're going. We differ on this one because I know you had your interview with Raoul Pal and you said the exact same thing to him. And you're like, how can you justify that, especially with Facebook and how many users they have as compared to a Decentraland and Sandbox? And his answer, I remember he talked about it. It was big. He was like, I think Metaverse will outdo a lot of different things out here. And you were even shocked by that answer. And I think it kind of comes down to this. To me, it feels like one of these things. This is how fortunes are made, right? Rothschild said this, buying low and selling too soon. I have no problem selling too soon. The problem I have is buying super as low as I possibly can. This is all speculative. So right now in the Sandbox and Decentraland, people think it's great and cool, but they don't even understand it. So that's why it's like, if you get in and you hit the right one, you can. And just like you said, the valuation's a little bit crazy, but so is the entire market. We'll see how it all works out. Ben, what do you got for this one?
I have very similar thoughts about it. I think the metaverse, well, I mean, I guess it depends on what the definition of metaverse is, right? To some degree, this is the metaverse, right? Like whatever it can be. But, I think the metaverse is really early, and people are extremely speculative on it. And I looked at some of these platforms, maybe as I mentioned last time, and I walked through some of them, and I was just bored to tears. I'm just like, what am I supposed to do here? What's the draw to stay here? What's going to keep people here? So I find it somewhat challenging in my mind to think of these projects as worth what they're currently valued. But then again, I mean, that goes with everything these days. Everything. If you're not buying something that's not up 100x in the last 3 years, you're basically just not buying anything. Yeah. So I would argue that most of these plays are very overvalued, but we also know that doesn't mean they can't become 10 times more overvalued before something eventually pops. With a lot of these plays right now in the metaverse, I think that will Decentraland be the place everyone hangs out in the future? Maybe, but I mean, the way it currently is, I don't think so. So in terms of that, I'm not super enthusiastic. I do think the next cycle, though, there's going to be a lot of great plays. I think it's also hard to know between, say, some of the gaming projects and some of the metaverse plays. Some of them just seem like cash grabs to me. It's a very not really well thought out project, and it just seems like a cash grab. But I mean, there's Sunday Swap. Obviously, we talked about that before. That's coming out relatively soon on Cardano. That's probably the most exciting thing happening on Cardano right now. Which, I mean, it's not saying a whole lot considering we've been waiting for a while. But I've got my eyes on that.
Yeah, and I think I mean, look, Sunday Swap when it comes out for Cardano, it'll be one of their first working decentralized exchanges, if it all comes to fruition, and we'll see. Right. And that comes out, I believe, this Sunday. And just so you know, Ben, if you go to his YouTube channel, I'm sure there's a link to his stake pool. He is one of the 30 that has been chosen to actually be a part of the stake pool offering for that. So if you stake to Ben's, you get ADA and you get Sunday Swap the token. So go check that out. And then before I forget, James, I think you wanted to, did you have something else to say about that last one? I think I cut you off a little too short. Sorry.
No. Well, regarding Raoul Pal, I tend to be, I'm not really call myself a value investor, but I need to see fundamentals.
Right. And
I see tremendous fundamentals growing in so many different areas of crypto, but I just can't, when I see a token with 140% inflation and crazy valuations, it's like, I just, one of the reasons I got so attracted to Bitcoin back in 2017 was because of its finite, in fact, deflationary supply, because so many people are losing their seed phrases, wallets are breaking, everything else, and there'll never be more than 14 million coins. That's what I love. And what I don't like about fiat is the money printing. So anything that's inflationary, I am automatically opposed to. So I try to find things that are less inflationary. That's one of the reasons I like Ethereum as well, because it's going to become deflationary as we go forward.
Yeah.
And it has so much utility. People don't realize not only is it a store of value, but to get stuff done, you need to use ETH to get it done. And don't talk to me about gas fees. The story of somebody had to move $3,000 and it cost $900. And I think that's also one of the reasons, maybe an interesting theory for you guys. So things like Aave and Uniswap, they're all kind of ETH based, but they're all suffering right now. Is that because they are, a victim of their own success, or Ethereum's a victim of its own success because it's so popular and the gas fee is so high? People are looking at different alternatives for DEXs.
Yeah. Well, I think like there's a project I'm going to cover coming up called Aavegotchi, kind of like from the 1990s Tamagotchi, but it's all based on Aave and of course based on Ethereum. And when I was talking to a couple of the founders, they said, the problem we had was gas fees. It was crazy. So now we're switching over to Polygon and we're doing things that we couldn't do before. And if we didn't have Polygon, we couldn't scale. And I think when we start to see these layer 2 solutions or side chains, I think that's the bigger story. And that's why I'm trying to get a little bit more exposure to those. Ben, what do you think?
Yeah, I mean, I think anyone getting exposure to these layer 2 solutions, I think that's a good play. There's certainly a lot of these smaller projects that are coming out or that have already been out for a while that you could get exposure to. I think Polygon, if I'm not mistaken, I think they have a conference relatively soon. I think Vitalik's going to actually be at it. So I do think that some of those plays are. I'm actually more interested in that right now than I am in some of the metaverse type stuff.
I'll leave it with this. I had CTO Larson on the show about a week ago or so, and he's been, he's a developer from years past. And he said, and he made a good point. He goes, you can't invest into protocols back when the internet came about. You couldn't invest in TCP/IP, HTTPS. You couldn't invest into that. He goes, but you can invest in protocols right now with cryptocurrencies and digital assets that have dual functions. And I was like, man, I guess that's very true. I mean, I really couldn't invest in the code, but I can invest into this code. So it makes a lot of sense. All right. So that concludes it for that. Let me blaze through a couple of questions and I'll get these guys out of here. And we'll see where we all went. Let me start up here. Let's see. Yeah, paper hands. Real quick, we're going to start hearing about Mt. Gox. James, you covered this in your video. Can you just do a quick snippet about why this is not a big deal as a lot of people are making it out to be?
It comes in different tranches, and the amount that people are being paid back, not even getting their crypto back. Some are, some aren't. It's extremely convoluted between the people that are actually managing the actual funds. So it's probably too much to touch on right now, but check out my video from a couple of weeks ago. I think the biggest concern about Mt. Gox is the potential FUD, but right now there's so much other more dangerous FUD out there than that. People were afraid that the total supply of coins, I think the total is 140,000 Bitcoin, would hit the market and tank it.
Yeah.
But the market's well capable of absorbing that these days. So not a concern. Plus it'll be trickled out. Plus a huge percentage of people that never thought they'd see their coins again. And all of a sudden, if they do get them back, they'll be very happy, and I don't see them selling. So it's a bit of a nothing burger, as we'd say. But it does rattle the market, so you always have to take into account this FUD because it can bring about buying opportunities.
I think so. All right. I don't see many questions. Hold on. Let me get this one from TJ. Here we go. This is from, I can't put this up. This is from Cali GVLA 71. And he says, can we ship in and get Ben a proper mic for Hanukkah? First of all, I will tell you this. That same mic that Ben has used, that was the exact same mic I used for the first year and change of my YouTube channel. And it worked out great. And the only reason that I changed it was people kept bugging me about it. And I thought, well, I'll get one of these mics. To be honest with you, honestly, it doesn't sound that bad. I don't think.
Oh, sorry, go ahead.
No. Go ahead, Ben.
I was like, yeah, this is my, I'm on a laptop. This is my camera for my laptop. And this is, a pretty bad microphone. The lesson here, right, is opportunity cost. And I think a new microphone would bleed against Ethereum, so I cannot justify it until I think the bear market is upon us.
That's how you pinch pennies right there. Excellent. So yeah, and then last one, Jimmy says, what's your opinion on one and how will it perform the rest of the year? I'm looking at one, EGLD and AVAX as my last buy this year. AVAX, I can tell you, looks pretty good. It's very fast. The transaction fees are low. It's got a stellar team. I think it could be a real winner. I don't know exactly the exact tokenomics. I'm sure James could speak to that, but I think it could do very well.
Yeah, I've got a small position Elrond. Harmony One I do not like because of our kind of coinpendium quantum model result. And what was the third one?
Avalanche.
Avalanche, same situation. I was into Avalanche at about $10 and I sold it at 48 and moved that money to Solana because I do believe it's an inferior project to Solana right now. And the tokenomics, again, is quite inflationary. But they are burning, and I'm just trying to get a handle on exactly how impactful the burn is. When I first analyzed the original burn, it wasn't that impactful. So we'll see if it'll get a lot better. But the inflationary nature of Avalanche is higher than some of the other things that I'm in.
Yeah, got it. And the last two questions, James, you're shorting any securities right now? You talk about shorting Tesla. What are your snipe prices?
I just traded twice actually on this video. So one of them is a very risky play. I won't announce it right yet, and it hasn't filled yet either, but it's going to jump in. And then I have a couple of cover limit options open on some of my shorts. But right now, so what's very interesting about this time of day, got 12 minutes to go before the market close. Bitcoin is beaten down, and I like the Bitcoin proxies. So looking heavily at MicroStrategy right now, that is completely oversold. I mean, if you look at, say, MicroStrategy versus Bitcoin over the last month, Bitcoin's up 20%, MicroStrategy is flat or down 5%. So that just tells me there's a problem. So that one will, I do believe weekends sometimes are normally 70% of the time good for Bitcoin. And I think we could see a nice rebound, especially if the markets get over the fund. In fact, it's already rebounding. I mean, just looking at Bitcoin now, I mean, if it hit 51.6 during this stream, now it's 53.2. So like literally by tonight, we could be back up at 58,000. And that means, if MicroStrategy closes weak today and Bitcoin rebounds, boom, yeah. MicroStrategy is a big deal. So that's what I do. I like to play the arbitrage of MicroStrategy. It's like stealing candy from a baby sometimes. It's very, very enjoyable.
And then this one I can't bring up. It's a super chat. They said, does Ben have a Patreon?
I mean, yeah, but
okay. So here's what I'll do. So for this one, if you want to go to check out Ben's channel, that's Into the Cryptoverse. You can check it out right there. And then, of course, if you want to go over and check James's channel, his is Invest Answers, which is right there. So the link's in the description, and that is it for today and all the questions. So I want to thank these two gentlemen for coming by. I appreciate it, guys. And any last words of wisdom before we take off, because I think it's about to get pretty bumpy.
Yeah, I do believe we will see a 20% gain at least on Bitcoin in December. I think we've just been hit with a bunch of bad news, and bad news happens in threes. Today it happened in fives. And I think the market's just going to shake that off, but that does impact. There is still a correlation between the S&P 500 and Bitcoin. But I do believe there will come a time where Bitcoin will be the flight to safety, like the safe haven asset, the risk off asset that people will run to. I think we're getting closer to that right now because of the equity market valuations, and Bitcoin is just finite and the world is catching on, and we are so early. I think Ben would agree with that too.
Yeah, for sure. Yeah, I look, it's going to get choppy for sure. But I mean, Bitcoin during the stream, it actually went down to that 20-week moving average within about $100 or $200. So I think the important thing here is let's see if we can hold the line, and I would say there's a good chance we can. So if we do, then hopefully we can look back at this time in a couple months and just say, that was a good buying the dip opportunity.
Yeah, a couple months. Imagine this. Imagine what we could be talking about in a couple years. This is going to be a laughable show. They're like, can you believe it that Bitcoin was below 100K at one point in existence? Yeah, go watch this show. All right, everybody. Thanks so much. Links in the description. Gentlemen, thanks for being on. We'll see you guys on the next one.
Thank you, guys.
Thanks.
And the audience too.